Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Connon.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel O'Connor and Dennis Dick on this show today. Really going to talk about the story, what a day retail had yesterday, and it's kind of continuing with more headlines today since we have earnings from Target and Urban Outfitters. So retail, I have a feeling, will lead the show. We're also going to talk about just the sheer number of new ratings there are this morning. There's just a ton of ratings changes this morning, so we're going to get to as many of those as we can. And then, of course, we'll, just as we said yesterday, how Trump doesn't have influence on the markets. He goes and tweets about Amazon, and Amazon is trading down. So we got that on the radar as well. Our guest today at 8:35 will be Jonathan Corpina. He's a senior managing partner at Meridian Equity Partners. We'll be talking to him from the floor of the New York Stock Exchange. Joel, how is it doing in the markets?
S&Ps are in the $0.02 range. That's pretty quiet for crude. Found support, I believe, in the lower 47 handle, maybe right at 47 even. Look at that. We got a little bounce. Yesterday's high right here around 48, and that's our current high at 47.94. Gold continues to leak here down 340 at 1276.30, and silver now well under $17, down 4 cents at 1667. Dennis, rough morning for you, huh?
It's just one of those mornings, like it just, and you go through these as traders are going to go through these spells. And it's been like a 6-day spell for me where I'm just getting hit on random bad luck. And how do I know it's bad luck? Well, I'll have a position on and random news comes out against it. And I'm not so I'm in it prior to the news. So today, how many days am I long Amazon overnight? Well, I was long Amazon overnight, and it was looking good at 4 o'clock in the morning, for even 4:30, 5 o'clock in the morning, until the Trump tweet at 6 o'clock comes in, and they knock Amazon down 1%. Now, it's not a big deal, but I'm doing a lot of stat arb, a lot of different stuff, and all of a sudden, Amazon falls $10 on that. It's like, come on. So a Trump tweet gets me here. And just jokingly, I was saying to you yesterday on the pre-market show, so I kind of jinxed myself, Spencer, but I was saying that these Trump tweets, they aren't that influential anymore. And then I get dinged the next day with Amazon coming in. It's not funny how the world works. Trump comes in with the Amazon tweet. And do you have that Amazon tweet just so everybody can, know what I'm talking about, Spencer?
Yeah, I do. He's got a bunch of retweets this morning, so got to scroll through that. But it came out about an hour ago. Amazon is doing great damage to tax-paying retailers. Towns, cities, and states throughout the U.S. are being hurt. Many jobs being lost is the Amazon tweet this morning.
So Amazon falls basically $10 as soon as he tweets that. And obviously, I was long Amazon. I've sold out now because it's bounced back a bit here. But, overnight, it just sucks. And when you have, a position on, and what are you supposed to do? There's nothing you can do. When you have a position on already and random news comes out and gets you and moves against you, it's going to happen. It just usually doesn't happen 3 times in like 6 days for me. So, but you were saying, Spencer, that bad things happen in 3s. So maybe my run of bad news hitting my random stocks is over. You can go sometimes months without a random piece of news hitting one of your stocks. Of significant news, like a ratings change might happen, but of significant news hitting your stock. But, sometimes you have these runs and, you just got to say, okay, well, sometimes it can work either way. I mean, when you're in a stock and random news comes out, it can be good for you or it can be bad for you. Just as happens the last 3 times has been bad for me. So it's starting to get annoying. Anyways, this Trump tweet is moving Amazon here this morning, though. Amazon trading down. It was actually trading up because it caught an initiation at buy at SunTrust, and it was trading up early before that tweet, up at 985, 986. Then the tweet came out and the sell-off. Joel, tell us about the pre-market action.
They hit it, and they hit it good. Just immediately on that tweet, they took it down to 975, and now trying to bounce back here, down only 286. It's hard to look at the pre-market action and give you a real good take on the stock. I'm just going to go to the dailies here and try and give you a little bit more perspective. Boy, 950 is just, we hit that a few days ago. I don't know. This thing's going to decide. So you're going to break down below 950 here and test the waters at 900, or it's got to get back into 4 digits above 1,000. I think anything in between 950 and 1,000 is a lot of errors. You can see the way it traded. So I'm just going to wait for a longer term setup here. You could definitely see the support and the resistance too at 1,000. So right in the middle of the range almost.
So it's kind of like a good storm, I'd say perfect storm, but it's good news for a lot of your other retailers here. And there's not only that news, there's also the Target numbers too, which are really good, and the Urban Outfitter numbers, which are really good. So retail, your traditional retailers could have a pretty good day here today. Urban Outfitters trading up 18% right now. We're going to get those numbers in a second. Target's up 5.5%. I just want to say, and Walmart's trading up and Costco's trading up. And, you're seeing a lot of these other retailers that have been Amazoned as of late. I'm sure, the people who are in those all of a sudden say, hey, okay, well, if Trump's going to get on Amazon a bit, maybe we should be going and buying some of these retailers that have been Amazoned. So, there's multiple reasons why the retailers might be strong here today. Let's jump into a couple of those earnings reports, and let's go to the big one here from this morning, which is Target. It is trading up 3 points here in the pre-market. Looks like a beat and a raise, Spencer. What's going on?
Was that your French-Canadian pronunciation?
Target.
Yeah. Okay. Target reports Q2 adjusted EPS of $1.23. That's a 4-cent beat of the estimated sales of $16.429 billion for a $16.3 billion estimate. Comps up 1.3%. As far as their Q3 guidance goes, EPS coming in line, but mostly higher than the estimate. The range was the estimate was at the bottom of the estimated range, or of the projected guidance range, and then they're seeing their fiscal year EPS coming in line as well. And so pretty good guidance there and a good Q2.
One consideration, this is bouncing right back to old resistance. And I think Joel's going to point out some of these levels above 58. Actually, I'll throw it right to you, Joel. Is that what you're looking at too?
Yeah, it's interesting here because it's not, we want to see if it's going to be the scenario where you have these gains and then they quickly evaporate. But at this time, still holding on to gains of $3.10. Your pre-market high that we just reached a few times, 57.77. You just hit 57.75 in the last bracket. So I think barreling through 58, and I think the number I would keep an eye on would be 58.58. The longer it doesn't take to get up to that area and just keep this rally going, I think you might have some more, backing and filling here. Need to get way down to 55.78 to fill the gap, but the 58, that's number if you could clear 58, but it doesn't look like it's going to do it, Dennis. It looks like your signers are even sellers are lining up ahead of that 58 even number.
Yeah, I'm looking at it too, and this just looks like major resistance up there, and it's come back so far. I think, it's going to struggle to get up over that area too, but it's a good morning so far for 306,000 shares of trade, and it's not giving we've seen a lot of our retailers pop and give it back, and we're not seeing that here in Target, so that is good news. And we're not seeing it in Urban Outfitters either. I'll tell you, last night I tried to shorten this thing a couple times and it was not working. URBN, I kind of thought the 20 would hold and, and blew through it. And it's trading there right now, 20.01, but your Urban Outfitters up 19% here now, Spencer, the numbers.
Yeah, good pizza sales, I think. Urban Outfitters, Q2 EPS, 44 cents.
My line.
Sorry, 44 cents versus a 37-cent estimate. Sales of $872.9 versus $861.78 million. So they beat on the sales. They beat on the EPS. Comps for the quarter down 4.9%.
And the stock trading up like we said, 19% here this morning. This was lifting all of your, your teeny bopper retailers like the Gap last night. GPS was trading up, but I noticed even Macy's catching a little bit of a bid off it. Kohl's was up last night. Nordstrom. You're going to think about, all your apparel retailers here. That's going to help all of them as well. So Urban and Target both helping that sector. And the only thing and the only concern is, we've seen it multiple times where, you get these pops in some of these retailers and they just give it back. Urban, Target are holding so far. So, but if you're trading any retailer, keep those on your screen, because if for whatever reason sellers start to merge, that could spill over into the other stocks too. But as of right now, it's looking like it's going to be a pretty good day for retail.
Pre-market high 20.65, currently trading at 19.9. This 20 print just went off here. This one, there's not much. We'll go to the dailies, take a look at the daily charts, and my number of the day in this one's going to be 1975. And the reason that is because you had a quad of highs right in that area back in late July and early August. So there are a lot of sellers there. Took it back down to as low as 1668. Let's see if those sellers come back in there, because theoretically we're trading at 20. 1975 should be support. So that if that doesn't hold, I think you can do some backing and filling in this one. $20 a psychological number, but holding that old resistance for me is critical. For Urban Outfitters, trading up 19%, 20 even at up 318. And Dennis, this one I was looking at the chart and I was thinking, man, is this going to be at $10 tomorrow? Looking at some of the
yeah, I know. Well, we saw what happened with Dick's yesterday, and we saw what happened with Advanced Auto Parts. It's like, holy cow, man, this is the wrong time to be reporting earnings if you're a retailer, but. These stocks got to pop, and maybe some people were speculating the wrong way and leaning the wrong way here. True. But we got to talk about the Dicks, and we got to talk about the Advanced Auto Parts, because that is unbelievable. Dicks fell $8 yesterday. I mean, it was a $34 stock down $26.87. The question here is, and if you talk to any of these analysts or any of these people on CNBC, they always go with the trend, and they'll be like, these things are all garbage. You can't own any of these things. Yeah, for trades are difficult, but how I've always said, I'm a momentum trader, but a contrarian investor. And sometimes when there's blood in the water and all these things are as ugly as you possibly think they could be, sometimes just throw them in your investment portfolio if you have a little bit extra money and sticking them in there is sometimes the best thing you can do. I think there is some good deals out here in some of these retailers. I think it's overdone. I think the Amazon fears are legitimate, but I think they're overdone in a lot of stocks. Is Dick's one of those stocks? I don't know yet. I'm going to do some more research here, maybe over the next couple of days, really analyze the company fundamentals. But, I'm just thinking, and these are not trades. These are not like, day trades. And I think it's going to bounce back here today. Some of the retailers are going to bounce back because of Target and Urban, but that's the only reason. But I'm just thinking long term, if you look at some of these things that have just been murdered because Amazon's eating everybody's lunch, apparently. If there's not some deals out here, some stuff isn't overdone. And I think, there's going to be some deals here, and I'm going to do some hunting here in the next couple of days and try to see if I can find a couple of those deals.
Yeah, with Dick's, it's just those huge stores.
I know, I'm scared. It's not really one that I think is going to be one of those that's going to fit the bill, because you're right. I'm scared of those stores. They're big stores, big expenses. The chart is just awful. I mean, you're totally picking a bottom if you're coming in here. But, something like a Kohl's. I don't know. I'm just torn. Is every apparel retailer here going out of business? Is that really what we're saying? Because, the Kohl's dividend is 5.77%. Macy's, they're bigger stores. The Kohl's stores are big, but they're kind of sell the discount stuff too. They're kind of almost like, when I just analyze the stores themselves, not looking at company fundamentals, but looking at the numbers, but just looking at the stores. You get the Macy's and the Dillard's; those are like high end. The Kohl's is kind of a cross almost between like TJ Maxx and Macy's. So I wouldn't even say it's like exactly like Macy's. They're big stores, but they're independent and they sell a lot of discount stuff. So I don't know. I don't mind the Kohl's here. And, it's $38 here this morning. It's come in significantly from where it was. It's 44. We know that. I think the dividend might be safe. I'm going to do some analysis, but I've played it once already down here from the 30s, and it worked out for me when I had that big run. I think I might nibble into the Kohl's here, especially if it got down to that 36 area.
Here's what always blows me away about Kohl's, and I like Kohl's a lot, and I do shop there on occasion, but I've never gone to Kohl's and not used like 4 coupons. So they just throw coupons at you all the time, and I've always wondered, like, how do they make money? I'm paying like half price for like everything that that I'm buying there, like every pair of jeans that I buy or whatever. They just throw coupons at you, and that always kind of blew me away. How they just do
the
that.
best thing about Kohl's is you go there, Spencer, with your coupon, and you hand them your coupon, and then they give you another 10% off just for fun. It's like the only store you go to check out, and you think you're going to be paying 20, and you end up paying 15. I always get that good feeling, and I don't shop a lot, but Kohl's is a store I've always liked just because, I'm cheap, and I go in there and I like the stuff's, just cheap in there. I'm torn here because I want to buy a few of these retailers. I am scared of Amazon eating everybody's lunch, but I don't think it's as bad as the market thinks it is. And I think there's going to be some opportunities. I've already talked about Costco before. If Costco ever gets under 150, I'm loading the boat. It's 156 here right now. I think Costco is dirt cheap, like comparatively to where it was. I'd love it to get down to that 145 area. I don't know if it's going to get there. It's stalled here a bit. That's why I'm hoping they come in more. But don't you think, Joel, there's some deals out here when, they've thrown out every retailer, like even the Advanced Auto Parts. I mean, these companies make money. Okay, sure. Can you sell auto parts on Amazon? Can they get Amazon these things? Sure, they can. But at a certain point in time, valuation just trumps, worrying about Amazon.
Spencer made a good comment about Advanced Auto Parts. He's like, well, in 10 years, when no one has their own car.
I was being a little facetious when I said,
come on.
When I said
the cars aren't going away. They might be flying cars, but they're not going away.
I obviously they're not going away in 10 years, maybe in like 30. Gene Munster was in our office and said driving will be illegal in 20 years. So, maybe
what was he saying? Stop.
When Gene Munster came into our office 2 weeks ago, he said he thinks driving will be illegal in like 20 years.
What do you mean? I don't understand.
Well,
how is why? Because you mean like a person driving?
Yeah, self-driving cars. And his argument was, well, riding a horse and buggy on the road is illegal now. So it's just,
I see those Amish people still do it.
Live in Canada.
Yeah, you have the Amish in Canada.
Okay. Anyway, I don't think I'm not saying I don't think cars are going away anytime soon. Once you create, we've said this on the show a couple weeks ago. Once they create teleportation, where they break you down your molecules, cars are gone. But I haven't seen teleportation or anybody talk about creating teleportation yet. So I think cars are still kicking around. I still think there's a place for stocks like Advanced Auto Parts. Everybody has thrown this completely out here now. I'm going to wait till it stops going down before I put it in my investment portfolio. But this one's on the watch list.
I was watching this one yesterday, and I remember saying on the show, I'm like, looking at the monthlies, I'm like, well, there's really not much between 80 and 100, and because it did it all in one monthly bar, and never did quite get to 80. Just general comment when you're talking about the Target and the Kohl's and who else fits in that category. To me, let's say you put a blindfold on me and you didn't have like the store colors, I wouldn't know the difference with what store I was in. I wouldn't know it seems like it's all the same apparel, all the same. I mean, everything's the same. So, let's say JCPenney. I don't think I'd be able to distinguish what store I was in. So I don't know how they do it.
Well, the tumbleweeds are on JCPenney's floor. So you might be able to tell by the tumbleweeds, but
cover a couple stocks.
That was a joke too,
I got you. Not a good one. Let's just get a couple stocks in the chat here before we
Target, just stop. Target just fell back. So, keep an eye on Target, but this is already leaking here. 57.5 we started the show. It's 56.
What's up, guys?
Hey, conference call. Said the company could close more. Wait, I don't actually understand what this even is.
This isn't
good. I think there's actually a typo on this headline in Pro, but says more than 300 store remodels. I guess they could stop it. I'm not sure. But yeah,
whatever. Price don't lie.
Whatever's being said on this call is not being good.
Yeah.
Well, it just fell buck from whatever was said. So it was comfortably trading in the 57 handle. We're now in the 56 handle. Yeah. So I guess that 58 level we were talking about is maybe going to hold here. Walmart's leaked back its gains there too. I mean, Walmart was trading up at near $82. I actually went out and tried to sell it short up there. I couldn't get done though because only a few shares were trading up there. Wish I would have got done. Stock is now trading. That's the nice thing about paper trading. You get every stock you want on paper. You try to execute though. Big difference, man. Big difference between trading on paper and actually executing. Because on paper, I shorted Walmart here this morning up there, but I'll tell you, I went out there when I was trading at those prices, and you could not get short.
I got it.
You got to find the bids to hit.
I got the headline now. There's a typo, but I got it now. Target CEO on the conference call says the company could do more than 300 store remodels, so it's gonna cost money. But I don't know how bad that really is, but that's what that's what they're saying. It doesn't sound bad, but that's what they're saying.
Anyways, the stock just fell back on that news. So Walmart's actually up only 25 cents here now. So Walmart's giving back all of the gains pretty much. I don't know, man. It's hard. Walmart's been an unbelievable performer too. This was one I'm very scared of going into the report. I already talked about this. They're going to report here tomorrow, I believe. Walmart.
Print. Oh, did you see this print?
Walmart's
Dennis?
Tomorrow.
Dennis, how did you let this trade 82 even?
I'm telling you, man.
How did you let
I got up there. Yeah, but what was it? Like 100 shares trade up there?
I'm not sure. Actually,
tell me the volume.
Let me go to my shorter term.
It was nothing because I was up.
Yeah, you're right. I was
trying to get short up there. The problem is, here's the deal. When it is that thin and I throw out my 81.95, well, the trade's in front of you. It's hard to get. You need a bid to hit. So if you're just coming here throwing offers out there, well, you're making your case bad, because if you're trying to get short and you're just throwing offers out there, other people throw offers ahead of you. So I usually wait till I see a bid to hit. So where I get it on for sure. It never got bid up there. If it did, it was 100 shares. So I've been trying to short all morning. So anyways,
what a great level. 81.99.
82 is an awesome level.
Well, 81.99. You hit that 4 days ago. You hit 82 in the pre-market. Also, a couple other highs in that area. Someone stalks the $82 level ahead of the report. Yeah, John Dodson, anything can happen on a report. John picked up some earlier in the week, and he's waiting for a good report. Sticking with retailers, and I see Kroger way up here. Someone was asking about Kroger's. It still is just trying to recover from getting Amazon here. Did get back in, did fill the gap, the double gap thing that you had. That was from earnings, and then that's when Amazon bought Whole Foods. So 2046, what was your maybe get a 50% retracement here if possible. You hit a low of 2046. Let's call it a 4-point move. 22 and a half, 22.75. That would be the area of interest here if Kroger pulls back. And if you want to buy it on strength, triple top at the 24.70 level, bust above there. It has some work to do on the upside. And then what else? Johan Smith is asking about Baba. And we had, did we have a ratings initiation or something like that on
SunTrust went nuts today. So
Spencer, I know. What's going on over
SunTrust just initiated on every single tech stock. They didn't cover these stocks before.
I don't know.
That's what there's all these initiations from SunTrust. And Spencer, can you enlighten us here? Did SunTrust not, or Brentster? Maybe the Brentster knows what's going on here. But SunTrust initiated on all your major tech companies here this morning.
Most of the initiations are from the same analyst, so you'd have to assume that they got a new guy there on there. The Baba initiation is actually not from that analyst, from someone different. But so I think there was two different notes. Is really Baba initiated a buy, but then there was this other note with this different analyst who initiated Twitter at a hold. Let me go through here. So the buys are Shutterfly, Priceline, Alphabet, GoDaddy, Facebook, Expedia, and then the holds are eBay, Endurance.
Well, here I got our trusty Benzinga Pro up here. Yeah, I got the Pro up here, right. And just to show you, 1, 2, 3. I mean, there's got to be 15, 20 initiations in there.
Yeah,
some big stocks: Alphabet, Pricelines, Snap, Twitter. So someone woke up here at SunTrust and just decided to. It might be something internal, but when you're looking at your Benzinga Pro here, this is how we pull up our ratings, the ones that we're going to talk about on the show here. So just wanted to give you guys a quick look at what we're getting our information from. Anything else in the chat that you want to talk about?
Well, let's just talk about some of these. I mean, SunTrust. So,
sure.
Here's a couple standouts here, and the big ones aren't moving on these, and the big ones don't move as much, because it seems like somebody's initiating on Google every day. So, you got Google trading up a little bit in the pre-market, Facebook because they got initiated by Baba's trading up. But Baba trades up every day almost anyways. What about Snap? They got to sell on this thing. So, here we had yesterday, I believe it was Cowan upgrading it. Now you got Snap getting downgraded to sell with a price target of 10. I mean, that's a bold call. Is that a street low for Snap?
It was Canner with the upgrade yesterday.
Canner with the upgrade yesterday. So Snap here, we're looking at Snap trading down, obviously, in the pre-market here with a sell rating from. What are your thoughts on this one?
Man, oh boy. That nice exit, Dennis. Did you guys get like over $13 yesterday?
13, yeah, 13 and 1308, I think.
Yeah. Snap. It's easy to figure this one out. Or potentially figure it out. What do you have? A $2 move here off that low, right? Off that all-time low of 1128, which Dennis actually sold, and it had a 2-point range. So come down to 1228 here, 35 cents away from here. They can actually come in and hold 1228, 12 and a quarter. Then maybe this thing's turned a quarter. If not, boom, back down to that low of 1128. All-time closing low, 1183 in Snap. Which other one of these do you want? Baba right back up. That thing was under 150. Boom.
Yeah.
Not for long.
160 is a big number, though. We're coming into it.
Yep. And all-time high in the Bobster, 160.39. Haven't hit that yet in pre-market trading, hanging out. Almost got to 160, 159.95. But just like 150, that really wasn't much trouble. When it broke through that, it went to 160. But just keep an eye, 160.39. That's the all-time high in Alibaba.
Back to the retailers. Interesting from Raymond James. Home Depot had a horrible day yesterday on a decent report. But RJ comes out, defends it this morning. They're upgrading the stock here this morning. HD is getting a pop. I'm just going to say overhead supply in this one, though, Joel. Don't you think?
From a day like yesterday and a not so bad of a report. I mean, a lot of people are scratching their head on this one.
I think a lot of people are scared.
Yeah, scared of home. Amazon. This is all going to be Amazon. We are going to take our driverless car. Well, we won't even need to go anywhere because Amazon will deliver absolutely our food, everything.
So this is why this is a good argument from Spencer. This is why because we're all going to stay home forever. And, that's, we don't go to the movies anymore. That was said last night on CNBC because we could just stay home and we watch Netflix and order a Domino's pizza. I think somebody said that on CNBC last night. Everything's delivered to us, Amazon. So I guess we don't need cars anymore. Maybe you're right.
I read a really good article. I'll put it in the chat in the Atlantic. It was written by a psychologist and a college professor who studied so Generation Z, which is like millennials. The millennial generation ends in like 2000, so it's like everyone born after 2000. So like today's teenagers are not millennials or Generation Z. It's all about like how teenagers today are their summer habits and what they do and how every like teen trend from earlier generations is down because they're all at home on their phones. So like they're dating less, they're drinking less, they're doing drugs less, they're doing everything less because they're all physically isolated. They're together, on their phones and on social media, but they're physically isolated, so they're not doing anything physically together. So they're doing everything less. And it was very interesting. Very,
Sounds
very
like they're having less fun too.
Yeah, I was just gonna say, I'm glad I'm not a teenager, man. It'd be hellish. But a really good question out of the chat here, Dennis, and it's a term that we use all the time here, so we should be more clear on it. What does overhead supply mean to you, Dennis?
Joel and I talk about this, and it's just basically when a stock has traded in an area for a long period of time and then tanks. When it comes back up, or when it starts to come back up, there's all these people who are underwater. All these people who bought the stock over the last little while there are significantly underwater. And what that means is that they're going to be willing sellers. There's a lot of sellers out there, people trying to get their money back. In behavioral finance, they call it loss aversion. People don't like to sell at a loss. So when it comes back to a price that it was at for a while, there's a lot of people that bought the stock there. And then therefore there'd be a lot of willing sellers there. That's what, what we're saying is, possible willing sellers coming up. So what we say is Home Depot. Everybody who bought that yesterday on that good report got killed. So there's a lot of short-term traders here who probably, the thing fell fast. So especially even at the open, look at the opening bar. It went from 155 to 148 in like a half an hour. So if you were anyone that was saying, I like this report, it's going to come back, you got killed. So as the stock tries to come back up now, it's got all those people over there that got killed yesterday, and then bought it even, a week or two ahead of it because it ran up for a couple of weeks, that are all underwater. So all those people are going to be wanting to get out. So that makes it difficult for the stock to just bounce back.
Also just different perspectives here. Longer term investors, I saw this thing print 160.86 and then see it hit 145 before the report. And let's say they're saying, man, if this thing ever gets back to 155 again, maybe it's time to lighten up. And then you had a nice technical formation. You had 3 tops right in the 156 areas. People were trying to wiggle out of a majority of stocks. So you have the people that are super long term that are still sitting on some profits, and they think, hey, I want out at 151 now. I don't care what the old time high is. I want to have had profits in this thing. If you've been in it from 2012, you also have your shorter term swing traders that, what was this, a 7, 8, 9, 10-day winning streak that bought into earnings and they thought they were going to get an earnings beat. They're still sitting on some profit. So there's a lot of different participants in the market with different time frames. But when you just the target, for an example, you got a big pop up there, right? After this thing's been in trouble. Met people, shorter term traders, this thing traded down to 48.56. That's getting up at 58. That's a $10 move, right? Ring the register. So look at that, 56.5. We just hit 56.25. And if we're doing this, Dennis, you might as well, and it can be inferred from it, but underneath supply, right?
Underneath demand, we say. We always say that's something we totally created. So a lot of people say overhead supply, but me and Joel created the term. At least we think we created it, but we probably didn't. Probably just set it there. Underneath demand, and that's just the exact opposite. When a stock has been really, selling off, and all of a sudden it gets a pop. Well, you have a lot of people that have potentially, the other way. They're maybe caught short. So that's what gives you the potential for, to maybe squeeze those guys. And every time, the stock tries to come in, those shorts are going to try to cover. Not only that, you have bottom fishers that are saying, okay, the bottom's in, tries to pull back a little bit, and then they come in. So do you have an example for that one?
This might be a little of a stretch because Teva, maybe, you hit.
Ooh, I don't know. I don't know if there's any underneath demand there.
Yeah, I do. Someone like $17 here, Dennis. It's obvious. 4 trading sessions. The lows were between 16.81 and 17.12. So someone was definitely, whether to cover a short or to initiate a long, $17 area. Now you're $1 above it. So did you miss the low of the move, on this big slide? So, hey, I'm not going to try for 16.81, the low of the move. I'm not even going to try for yesterday's low, 17.25, 17.30, moving up, also to enter a lower risk long trade or to cover a short. So I think we could probably come up with a better example than that.
Yeah, but we'll probably see one before the show ends here, because we go through so many charts on the show.
TT Mac, thoughts on SWN? And boy, new to the chat, TT Mac is throwing a new stock at us. SWN, Dennis, have you ever traded that?
Yes, lots of times.
Southwestern Energy?
Common stock. Yeah, lots of times. SWN's a popular one to trade. Trade some volume too. It's going to move along with your energy stocks. So it depends on what you're looking at, and I'm not sure. Some of these energy stocks, you just got to look at their breakdown. A lot of those are natural gas. Some of them are oil. Some of them are mix. I'm not sure what the mix is there, whether it's going to follow more your natural gas or your oil. But obviously, oil has been a little bit on the comeback trail, but not in the last few days. So it started selling off the last couple of days. So some of your energy stocks are a little bit under pressure the last couple of days. Southwest Energy is holding right on to that $5. Big psychological level. We know stocks have problems. Sometimes, they bounce off 5 the first time. They start getting under 5, then they have trouble getting back over it, because for a lot of brokers, that's where stocks become marginable. But, you can't argue with the 5. There's some support at
some
5.
Yield in this, Dennis?
There.
We got some yield?
That's a good question.
Just one other comment here. Not just this stock, but the sector in general. I picked up this morning, read something about Blackstone is making a big bet on the growth of national gas production. The New York private equity firm made a $7 billion bet by investing in drilling fields, pipelines, and gas export terminal. So Blackstone has made some good investments here and there. I looked at the chart for natural gas. It doesn't look that great, but they're basing this not on so much the rise in the price of natural gas, but just more demand. And, so if there's more, if you're selling more, even at lower prices, it's possible. So not sure about the inner workings of Southwestern Energy, but I thought that was interesting note on Blackstone. All right. 8:35, Spencer. Who's our guest today?
Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. We're calling him, as we always do, from the floor of the New York Stock Exchange. So we'll be right back with Jonathan.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, and we have Jonathan Corpina on the line. He's the Senior Managing Partner at Meridian Equity Partners. Jonathan, how you doing on this Wednesday morning?
Good morning. How are you?
We're doing well. Just overall market assessment here. Couple quick breaks, can't even really calm corrections here. Now still within striking distance of all-time highs, despite a lot of possible negative things going on in the market. Just give your quick assessment here, basis the S&P 500 index.
Yeah, I mean, look, there's clearly a lot going on, whether it's domestic issues that we talk about and domestic economic issues, or whether it's geopolitical. And it seems like this market just kind of continues to tread water and trend higher. We hit highs, we retreated back a little bit with North Korea headlines, and it seems like we're kind of bouncing back around off of that. It's kind of funny how the North Korea headlines, which were so prominent last week, have been somewhat quiet this week. So I'm curious to see, as if when these pop up again, how the market's going to react to that.
Jonathan, Dennis and I interpret and look at order flow a lot, and certainly things have changed over the years with high frequency trading and bots using to get people out of positions. I just want to talk about a stock, and I'm not asking for anything like particular orders or anything, but a stock like Teva Pharmaceuticals here. They cut their dividend here. I mean, is this just a case where you're getting an order? A firm sells like. They have 5 million long, and they're just like, we're out, we're done with this. And then you get this kind of price action. Is it, is that the way, is that the way the street reacts to these kind of things like that? Or, do they take their time, try and, work out of it? Because in the case of Teva here, go ahead, give us your comments on that.
When you look at a stock like Teva that's gone from 33 down to 18, below 17, that has had a pretty significant move, and kind of what you see is the snowball effect, right? You've got significant shareholders that have changed their investment objective on the stock, and they want to get out and try to make as little impact on that stock as possible. When multiple people are trying to do that same thing, and like I said, the snowball effect happens, then that ball starts rolling downhill, and it starts rolling down really fast. Throw the computers in that are reactionary, not they're not jumping in when they think it's right. They're just reacting to everything else that they're seeing in the marketplace. So couple them on top of it, that just adds a lot of momentum to a stock. And now this can happen both ways, right? It can happen downside and on the upswing when you've got investors who want to get into a stock, and all of a sudden the computers start to see significant price variations and price movements, and then that triggers them to do something. So some of the moves that we do see, whether it's a headline-driven stock or not, some of it is computer-driven, and these strategies sometimes generate false movements in stocks.
Just one other thing too. I remember when I worked at Oldie Discount and stuff. We used to, if we had a big piece to move, we would go down there and get a look. Who are the buyers? Who are the sellers? I mean, in this day and age, is there any of that going on? Taking a look, see what specialists or designated markers. Is there any of that going on nowadays?
Yeah, absolutely. So, with the advancement of technology on the floor, back in the days when you mentioned back in the days, you say you'd walk out and get a look. We can still do that, but as we're going to get that look, I think we're armed with a lot more information going into that situation. I'm able to tell before even going out to the DMM who's been buying, who's been selling, not even just by firm, but by actual individual brokers. So the technology affords me the opportunity to see what brokers are buying or selling, not how much they've bought or what levels they've bought, just that straight they've been a buyer or straight they've been a seller. And I'm also able to contact them electronically through our trading systems down here. So we still have the price discovery process. Back in the day, it was all done manually. Some of the discovery process is done electronically now. But yes, in fact, we are able to negotiate blocks and pieces. If I'm a buyer in something and I know, Jimmy has been a seller, I'm going to go have a conversation with him, and we're going to get something on the tape. So the overall concept is the same. The mechanisms are just different.
Jonathan, I want to take you to a couple other stocks here this morning, and a stock that's been getting some major headlines here. Probably started with Deutsche Bank cutting the rating on it and saying that the dividend might not be safe. But I'm talking about General Electric. This has been, a stock that is owned in a lot of different investment portfolios by a lot of money managers, and it's just not getting any love at all here right now. Now we get Warren Buffett dumping the stock here too. What's the floor? What are the traders saying on a stock like GE?
If you look at a long-term chart on GE, it just seems like the stock doesn't really move. And I think investors, when they watch the market continue to grow up 5%, 10%, 20%, they want a stock that's gonna move. They are somewhat safe when they invest in GE because GE is somewhat insulated because they're involved in so many different aspects of the business. But I think in today's day and age, when investors continually hear how the market is performing and how well it's performing, and GE just doesn't get that traction behind it like some of the other stocks, people then start to come out of it. Maybe that's what Mr. Buffett is thinking when he's deciding to lower his position in this stock. But I think overall investors they want a little bit more.
Just want to ask you just real quickly, the carnage in the retail sector here. Some stocks are just trading at multi-year lows here. Last night, Amazon can't take over anything. Are there any retail stocks that, combing the ditches and perhaps looking for some potential upside?
It's such a difficult sector. The pressure that they've had, the pressure that they've seen, and we continue to have the brick and mortar conversation. And I find it myself that I'm spending more time shopping online than not. I think if you look at some of the retailers, it's been a real difficult sector, and I think time is really going to tell what happens there. And then you throw Amazon in the mix that has more cash than they know what to do with, and they're just going to continually buy smaller companies and buy competition and make sure they have their hand in every single aspect of sales that's out there.
We've been on the line with Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, giving us a look for the floor. I miss those floor days. Jonathan, thanks a lot. We'll speak to you again soon.
Gentlemen, have a great day.
S&P futures hanging out near the highs of the session here, up 550 at 24.69 and a quarter. Just kind of quiet, Dennis. Real quiet pre-market session here. Did we touch on any imbalances at 8:30?
No, let's do them because there is some standouts here. General Electric, more sellers, more pain for GE. 260,000 to sell here this morning. That's significant. Stock is already trading 3 cents in the red despite the S&Ps. I mean, this thing's at 25 written all over. It's just how it responds at 25. I think it's going to test at 25. I think it might even test it on the open. Alibaba, which we say every day, buy and balance, 135,000 shares to buy. Obviously, the SunTrust initiation at buy is probably helping that too. But 160 is a big level for this one, so I got to watch that one too because it's coming into some major resistance. Just jumping over here and some other ones. You got Bank of America, Snap, SNAP, 178,000 is selling SNAP. Again, that could be because of the sell rating over at SunTrust here this morning, but that's significant as well. Jumping out on my screen. American Express, 20,000 to buy. Square SQ, 102,000 to buy. That's significant. Other than that, they're pretty small right now.
All right, let's go to the chat here for one more before we move on to some more earnings and ratings. D. Ulrich, JP, I think he's asking. Oh, I hope that's what he wants here. Nice pop up. Not sure what the news is on this one. It just traded $11. I'll just do a quick technical on this one. I know Dennis won't want to. Boom, boom. All-time high right here, $11. No, it's actually traded above that to $11.55, but a lot of monthly highs right around 11. Dennis, where do you want to go? Do we get all the earnings in or earnings previews?
Well, we're still okay. So Cisco's going to be tonight. I thought is L Brands tonight too? LB tonight, Spencer?
Let me look it up for you real quick in the Benzinga Pro. I thought L Brands already reported, but let me check for you.
I thought they were due this morning too.
L Brands is tonight. Look at that. They are tonight.
Okay, L Brands tonight. American Eagle Outfitters, have they reported or is that tonight as well?
They're the 23rd before the bell.
Oh, it's not today. Okay, I don't know why it was on my screen. So, okay. Let's just preview Cisco, CSCO. It is going to report here after the bell. Stock actually getting up there at resistance around $32, but trying to break out. There's a gap to fill here. So if they do blow it away, I see that gap all the way up to 33.80. What are your thoughts on this one, Joel?
I see 32. Yeah, it's a lot here. I don't think you're going to get to it today. Sellers have a step down from 32.5. Resistance just over 32. Went out near the highs of the session. You might get some shorts, a little bit nervous. Let's see what it's doing in the pre-market. One thing about this one on that washout day after earnings, Dennis, man, what they lost, that thing lost over $3 or $3.50. It closes back near the highs of the session, but there was certainly an overreaction when you hit that 30.37, and maybe this is a little bit better of an example of underneath demand because you hit that 30.37, had a quick recovery to the $32 area, but you notice when it started to tail off again, it couldn't get to that 30.
Couldn't get back down there.
Now, in fact, buyers stepped up to 30.75. That was the level. So that's a little bit better example of underneath demand.
And jumping over here just to a few other stocks. Bristol Myers in the news here. It is trading down 2% in the pre-market. Full disclosure, I do have a long position in Bristol Myers. I was buying the dip on this last night. Bad news on the one drug. Spencer, details.
Top line results from the phase 3 Opdivo study they met one primary endpoint, but they missed another. So they'll continue to evaluate the third co-primary endpoint.
This got down the 55 handle last night. I thought it was overdone. I bought some stock. Actually, I was picking up around 56. I couldn't get the 55s. I would have liked to have got the 55s, but it was really a big whoosh. And then 56 was the only thing available, so I bought some 56. Up here, obviously 56.60, so it looks like it's an okay purchase for me right now. This is just an overnight trade, though, day trade, and I'm planning on selling it here probably near the open.
All right, just looking at the dailies here, and of course this is revisionist history, but you did get up to the $58 level yesterday, $57.99. 58 was $57.90 was your high in June. You also had a high at $57.93 in March. So if you were anticipating that $58 level as resistance, good for you. Pre-market low, $55.40. Doesn't look like it's going to get back down there. Trading back up at $56.60. I guess best case scenario for Dana, I don't know, gap filled $57.50. That was yesterday's low. But
I think I was going in this just thinking it was overdone. I still think it should be down. So okay. I'm probably selling I'm probably going to try to get out in the higher 56s. We'll see what happens.
Okay. All right. S&P.
Mylan Labs, MYL. I want to go to this one. Mylan Labs or Millen Labs, whatever you want to call it. I call it Mylan. It's trading up a buck. Citigroup giving it some love. They're upgrading it to buy here this morning. Obviously, we know Teva they weren't giving the love to, but they're liking MYL. What are your thoughts here? I still own this one in my investment portfolio. It's been a disaster. What's your thoughts?
Let's see here. You're itching up. You are up a stick after a real bad session yesterday. Well, came back yesterday. I mean, major support under under $30. You have a triple bottom in the 29.50 area. Don't think we'll be seeing that today. Kind of a small range yesterday, 31.50. That for shorter term traders, that was yesterday's high. You certainly need to get through that, and then you got some little bit of air on the 32 handle, 32.40. And Teva, did they get a downgrade today, or is that no? I don't know. They didn't get a downgrade, but they're saying showing signs of life. I don't know why.
I think they did actually. Did Teva get something today? I saw an analyst action on it. I thought it was Citi too. I didn't write it down though.
Teva got a downgrade today, yeah, from a Citigroup. But no,
so was Citi.
Yeah. Biden neutral, yeah. That was today.
Yeah. See, and this goes to show you here now, like, it gets downgraded and it doesn't even matter. I mean, upgrades, downgrades aren't even really influencing this thing now. It's been so beat up. I mean, okay, so it's bounced back. You know what, Joel? You're kind of, it's showing some life here. I think there is going to be some underneath demand in this. I take it back. I think you can get the lower 17s. I think there's people who want to maybe try to bottom fish in this.
I should have been keeping a closer eye on this one because, when we talk about, monster volume coming into a stock and, everyone that's getting out wants out. So the day when it really got shellacked, it traded 106 million when it ran or got dropped from 31 and a quarter to 23.75. And then the volume, it kept on going down, but the volume kept on dissipating. 93, 85, 51, back up to 60. And then with last 4 days, it's traded under 40 million. So to me, it's not so much people, I got to own this thing. To me, it's like, okay, whoever wants out is out here, right? The volume and, whoever's trying to cover a short now, you don't have the massive volume. But to me, just dissipated, turned around. I'm not sure how we're doing. We're trading up a little bit in the pre-market. Yesterday's high, 1801. Let's see if we can get into that 18 handle. Your 5-day high, 1849.
CMG, John Dotson saying it was wild yesterday, 317 to 335. Wish I would have been shorting up there at 335. I talked about potentially getting a little rally to short. I did not get shorted though. Stock is now back down here at 322, trading 325 in the pre-market. I'm still going, with, I think this thing's eventually under 300. I've been saying that for the last while here now. I think it's where it wants to go to. I wish I would have shorted after earnings when it got up to 355. I wish I would have been short any of these times. The thing keeps going down, but I still think it's sub 300 here. I think they're going to warn sometime in this quarter. That's just my thoughts.
Yeah, how can they not?
My opinion.
Let's see here. There was some news that there was some rumors that Elliott Management was starting to get involved with it, and so they had a big pop. But Elliott Management told Benzinga, we do not comment on market rumors or chatter. So rumors of Elliott coming into it. Someone's trying to get out of a long, got a nice boost. Now, $14 off that high. Yesterday's low in CMG is the recent low of the move, and that comes in at 317.41. Not too far away from that multi-year low.
There is some buyers down there at 320. It might take a headline for it to break that 317. I'm not sure it can just get down there and keep drifting on its own because it's starting to show some life the last couple of days. So headline risk all over this thing now. Jumping over to, I have a bunch of stocks. Where do you want to go? We didn't talk Fed minutes here yet. We're going to get the Fed minutes at 2 o'clock, and that would lead us right into talking about the financials. Let's look at a few of these charts here, like the Bank of America's, JP Morgan's, Citigroups. They all got a good lift yesterday morning, and then a lot of them gave it back. But what do you think? Like on a chart like Citigroup here, for instance, we've had a pretty good run. May we were $58. Now we're at $68. We've tacked on 10 points in 3 months here. What are your thoughts here on a stock like Citi?
70, 69.86. That's a big number. Hit that. That's been the recent high of the move. So got to get into the 70 handle for continued upside. On the downside, 67, you had a 3-day low. That was when the market tanked to just under 67. So looks like we're headed back towards 70. I'm just not too sure, what these Fed minutes are going to reveal, how, dovish or hawkish they are. They just seem to be flip-flopping like each time and just nothing real consistent. But definitely the banks want higher rates and see what happens in those Fed minutes to do. There'll be some good volatility in those.
Johan Smith wants to know about the gambling stocks, and I think he's probably talking Wynn Resorts. Had a huge pop yesterday, caught an upgrade,
Yeah.
and man, it just blasted off that. And sometimes it just needs a catalyst like that to take off. It was kind of pent up energy there. Went through 130 and just boom, 136.39, closing on the highs. Las Vegas Sands and MGM both having a sympathy move. Las Vegas Sands, pretty good day, and MGM popping up back a little bit as well here. What are your thoughts here on these casino stocks?
This win, I think I was probably on the wrong side of that yesterday. My comments yesterday is I didn't know if there'd be continued follow through. 140. I mean, you want to see this thing get to 140, take out the high, then move in 139.67 and just keep on going. It's holding up here, up 11 cents. Your close at 136.39. So you certainly you want to see it stay in the green. I can't really identify much resistance until you get to that 140 area. And then I think the high close of this move is really only at 137.15. So no, actually, correct me on that. The high of the move is 138.98. So if you don't want to hold out for that 140 area, just note the closing high of the recent rally has been 138.98.
GE selling balance now 357,000 shares, so another 100,000 tacked on there. It's 25.07. Like I said, I think I might test 25 at the open here. We'll see if I'm right. It's not very often we call an open on the show, but I think GE could open at 25 on the button. What are your thoughts?
I'm not going to
try to call the open.
I'm not going to. You're the master of the open, so I'm not even.
I feel like it's going to open at 25. I don't know.
But what's he going to do after that?
25. It's a big number.
What's he going to do after that, though? That's what we want to know, Dennis.
Got to hold. I mean, you need to hold 25. I don't start to see him break down. I think it could be one of those. I don't know. Actually, I don't know. I just think it's going to open at 25. So if you're sure at 25.07 right now, 7 cents there if it opens at 25.
Get in there.
We'll see
then. Let me see.
I know. I should have been at 25.11 when I was saying that.
This is
up 4 cents.
When did they do their whole special? Was it the special dividend thing?
No, you always get confused because I said they should have did a special dividend instead of a buyback. That was my thing. And that was when the stock was up at 30. And I was like, the companies always buy back the stock at the worst possible prices. I'd rather they give a special dividend and pay me. But, they did, and they did a buyback then. It was a big one, and it was up in the $29, $30 area, and now they're underwater on that buyback already. So it's like IBM. Remember IBM on their buybacks? Bought back so much stock at like 180, 190, maybe even $200. Now it's 142. They're so far underwater on buying back their own stock. And if you want to talk about a company that is just in a mess, man, this IBM chart, I know it's got a 4.22% dividend, but holy cow, with as hot as all the tech stocks have been, I guess you can't even call IBM a tech stock anymore. I don't even know what it is because, it didn't participate in any of the tech rally here. And if you can't go up in a tape like this, man, that does not bode well.
Made a new low of the move yesterday at 140.58. Just kind of quiet ranges here. Really needs to clear 142 to get some momentum on the upside here. And I was looking at the GE long term, and Dennis, we're back in areas. Remember we had that little day in August of 2015 where a little chaos in the market, right? Well, after you came off the lows of that day, you had a series of daily lows. Right at the 24.75 area. So perhaps under 25. That's the next stopping point. And what was it on that flash crash day? I'm just
it got down in 1937, I think.
Did you remember that, or did you look?
$5 that day.
Did you look, or did you remember that?
I remember everything. No, I actually looked at the chart.
Okay.
You believe that, though? It's funny, there's inefficiencies in the market sometimes. And, that day was just, an epic collapse. It was August 24th. We're talking to 2015 when, a lot of those ETFs fell 50%. You had individual stocks. A lot of them traded down 10, 20% that day. We did some coverage on it and showing you the charts. And, it was stock like even, GE falling $5. It just says everything. I mean, when the hell does GE fall $5? So sometimes, these inefficiencies are created by lack of liquidity. And in that case, no buyers out there and the stock just collapsed.
All right. It is 8:59. Time to wrap up today's show and see where Spencer has on the docket for Thursday.
On our show on Thursday, we're going to be joined by Jeremy Schwartz. He's the Director of Research at Wisdom Tree. He's responsible for the Wisdom Tree Equity Index. and as well, and the entire Industry Equity family. He does research for all their products. So looking forward to having Jeremy on the show. I think we had him on once or twice before, and he was excellent. So having some good guests on this week. We got Jeremy Schwartz on with us tomorrow. As far as our show today, you can catch it all again as it aired on youtube.com/BenzingaTV. That's our YouTube channel. You can subscribe to that to get alerts whenever we go live. Usually we go live every day at around 7:45 or so, about 15 minutes before the show starts. You can also catch the podcast on iTunes, SoundCloud, and Stitcher by searching for Benzinga or PreMarket Prep on any of those platforms. I want to remind you also about the Benzinga FinTech Summit, about a month away, September 28th in San Francisco. To learn more, go to bzsummit.com and Benzinga Pro, which is you saw on our screen earlier in the show. To get a free 2-week trial, go to pro.benzinga.com. You can also email us at premarket@benzinga.com to get a demo on how to use the platform. So that's it for us today. Have a good rest of your day, folks. Good luck out there, and we will be back with you on Thursday.